I'm Shae Russell from mining.com.au, and joining me today is Frazer Tabeart, the Managing Director for Alma Metals. Frazer, it's great to see you again. How are you?
Morning, Shae. I'm very well. Hope you're well too.
Certainly am, and I love to have a geologist on when we're actually sort of digging into some of the concepts behind copper and how we can get more out into the market. Now, as you and I have talked about in a previous video, there's simply not enough copper around to meet future demand, which is predicted to exponentially increase in the coming years. Now, as you alluded to in one of our first videos on this subject, there's falling grades. Tell me just how much is falling grades and the rates of discovery impacting future copper supply?
It's having an enormous impact. I mean, we can take some examples where, if we take the example of the Escondida mine in Chile, which is the world's largest producer of copper from a single source. I mean, that mine has gone from an initial head grade that was almost 2% copper when the mine first started out. It's now down at a head grade of about 0.85% copper.
Ooh.
And the resource underpinning the reserve is at about 0.6% copper. So you can see, as the high grade material on the top of that mine has been depleted, they're now into the lower grade material. And that means if you want to keep the same amount of copper coming out of that mine, you've got to increase your mining rates, and that all costs money, obviously. So that's a real world example of how this happens. And, when we talk, I think we're going to talk in a subsequent video about porphyry copper deposits. Many of those do have high grades in the top of the system. So as you go below that, then you by nature going into those lower grade zones. So that's something that's common with a large number of copper deposits. Then the other thing, of course, is discovery rates. Discovery rates have seriously dried up in the last 10 or 15 years. I mean, there are not many new greenfields copper discoveries that have come in the last 10 years. There are a few, and some of them look very, very good. But when we combine that with the increases in permitting timeframes, with where it's now taking on average between 10 and 20 years to permit a new discovery all the way through to production. That's where we've got this lag. We've got on one side falling grades and to some extent falling production, or increased costs to maintain production. We've got discovery rates drying up and permitting timeframes extending. So, it's almost the perfect storm in a negative sense in terms of keeping up with that demand that we talked about in an earlier video.
I'm going to pull on two threads of something you just mentioned in that answer, and that is the implication from a cost point of view of falling grade. You used Escondida as a great example of going from 2% to 0.8%. What does that do to the cost of mining it? And I guess what is the flow-on implication to shareholders?
Well, I mean, what it kind of forces the mines to do, and there's nothing wrong with this, but they've had to get better and more efficient at mining. There's nothing like falling revenue to sharpen your pencil about how you go about your business. And obviously, the big miners are very, very good at this. This is why they invest in technology, and they're looking for continuous improvement all the time. So, it probably hasn't had a huge impact, from a shareholder perspective, because what the mines have done is they've increased their throughput. Now, obviously, there's a capital cost component to that. But again, if we look in general, the unit cost of producing a pound of copper has come down over time. But because demand has gone up, that's what's kept the prices, in a reasonably comfortable zone for most people. And in fact, over the last 2 or 3 years, the copper price has quite strongly rebounded, and that's a reflection more of the demand side. But certainly, falling grades are always a concern for a mining house. But technology is very good, and the big mining companies are very, very good at maintaining those businesses.
And just touching on falling discovery rates. Now, obviously, you mentioned permitting is an issue, but why are discovery rates falling? Are we not spending enough money looking for more copper?
That's the bottom line. Well, that's one of the bottom lines is, you certainly need to spend a lot of money to make these discoveries. And part of that is because, and again, it depends where you go in the world, but, many of the places we explore in the world are relatively mature from a copper exploration perspective. So, the easy deposits to find have largely been found. The ones that are sticking out of the ground that you can find with low cost tools such as stream sediment sampling and geological mapping. Most of those terrains have been adequately explored from a first pass perspective. Now that forces people to then start looking under post-mineral cover and or in very remote areas and or in jurisdictions with higher sovereign risk. And all of those come at a cost. If we're working in say deeply covered terrain, we can't use simple geochemistry to make the discovery. We can in some cases, but it's it's a bit of a dark art. So we have to go to deep sea geophysics, and that doesn't always give you an equivocal answer. So it means you've got to drill more holes. Deeper drilling's more expensive because you don't have direct observations. Your geological and exploration risk is much higher. You put those all together, the cost of discovering a pound of copper is going through the roof. The amount of money being spent on exploration is at best stable, if not going backwards, and that just ends up, with the obvious end result, which are fewer discoveries are being made, and when they are being made, it then takes longer to permit them and get them into production.
Listen, Frazer, thank you so much for being here. And to everybody watching, make sure you're following these videos because in our next video, I think Frazer and I are going to nerd out over the geology. Frazer, once again, thank you for being here.
Thanks, Shae.